We really need to talk about what's going on with the crypto market right now because the next big move is just around the corner. So what's happening? Let us tell you what you need to watch out for. If you've been paying attention to the Fear and Greed Index, it's showing some pretty low numbers lately, 22 out of 100 to be exact. That's a clear sign that fear is dominating the market right now. But here's the thing, this level of fear isn't just normal, it's almost expected at this stage. Markets are driven by two powerful emotions, fear and greed. These emotions dictate how people invest, when they buy, and when they sell. When fear takes over, it pushes prices down as everyone rushes to get out. On the flip side, when greed kicks in, prices soar because everyone wants a piece of the action. Understanding where the market is on this emotional spectrum is crucial because it tells us what to expect next. Right now, the Fear and Greed Index is flashing a big red sign of fear, which historically often marks the best buying opportunities. It's totally understandable if this makes you nervous about your investments. Putting your hard-earned money into something as volatile as the crypto market can be intimidating, especially if you're busy with work, family, or just everyday life. Not everyone has the time or the expertise to dive deep into charts, trends, and market analysis. The lack of knowledge can lead to panic, especially when prices start to dip. But here's the key takeaway. Markets are not just about numbers, they're all about psychology. They run on human emotions, what people collectively think will happen next. That's why understanding market sentiment is often as important as understanding the technicals. To give you a better picture of where we are, there's a tool called the Wall Street Cheat Sheet that breaks down traditional market psychology into different phases like disbelief, hope, optimism, and so on. This cheat sheet overlays surprisingly well with the crypto market, showing emotions guide every peak and trough. If you look at where we are on this erosional roadmap, it feels like we're in a phase right before a significant upswing. The chart doesn't guarantee what will happen next, but it shows that markets often move in predictable patterns driven by crowd psychology. In the past few weeks, a variety of charts have been shared that points towards similar trends. It's understandable that some people are tired of seeing the same data repeatedly. But the fact that fear still dominates the market suggests those reminders are still needed. Many are still hesitant, which actually reinforce the idea that we might be in a prime buying zone. There's no obligation to stay in the market, of course. Anyone can exit at any time, wherever they're taking a loss or breaking even. But what about the ones sticking around? Well, these people have the potential for significant gains. Some investors are prepared to take that risk because they believe in the long-term trajectory of the market. Now, let's zero on a specific chart that has been particularly telling. This chart tracks Bitcoin's price on a weekly basis, highlighting its local highs and lows over the past few years, specifically since mid-2019. A fascinating pattern emerges when looking at this data. Bitcoin tends to have major price movement approximately every 28 weeks on average. Sometimes these moves happen a bit earlier, sometimes a bit later, but the general rhythm holds true. As of now, we are about 25 weeks since the last local high, putting us on a critical zone where a big move could occur. This is significant because based on historical data, it suggests that we might see an upward move within the next 3 to 4 weeks, potentially as late as 32 weeks, but no longer. This doesn't mean that it's guaranteed, of course. Markets can and do deviate from their historical norms, but right now, history appears to be on our side. If the pattern holds, we could be looking at a significant upswing very soon. Moving forward into the late September and October, there's a strong possibility of an upward shift. Historically, September has been a tough month for markets, and a bit of a downturn wouldn't be surprising. However, such a dip could lay the groundwork for a rally afterward. Even in the face of global uncertainties like potential recessions, interest rate hikes, and ongoing geopolitical tensions, crypto has shown resilience time and again. For instance, during the COVID-19 pandemic, market initially plunged but later rebounded and even thrived. This really speaks to the long-term potential of crypto, which often bounces back stronger after periods of crisis. What can we expect for this month? Looking ahead, the expectation is that after September, we can see the market find a new local low before starting to move up again. Confidence in this scenario isn't just based on current charts, it's also rooted in previous predictions that have played out similarly. For example, a forecast made last year in August predicted a market recovery by December. While the recovery started on October instead of December, it was still close enough to validate the analysis. This consistency adds weight to the idea that similar patterns might repeat. These predictions aren't just pulled out of thin air. They're based on several key factors, including historical market volume trends around Bitcoin halving cycles. Halving events, where the reward of mining Bitcoin is cut in half, have historically been strong drivers of price. The pattern has been consistent. Volume tends to pick up about 14 months before the halving, with a more significant increase around 8 months out, leading to dramatic price movements. This pattern was evident with the last 2 cycles, in 2018 and 2020, where the timeline from halving to the market top was exactly 548 days. Given this history, many are eyeing the next market peak around October or November of 2025. However, it's important to remember that markets rarely follow the exact same script every time. Just because something happened twice doesn't mean it's guaranteed to happen again, especially when everyone is expecting it. The element of surprise often plays a crucial role in market movements. There's a lot of chatters out there, especially on social media platforms like YouTube, where commentators can swing from doom and gloom to euphoric optimism in an instant. Many people often change their negative outlook on the market once things starts looking up, forgetting how pessimistic they were when prices were down. But if you zoom out and consider a bigger picture, not just in crypto, but also in other areas like real estate and stocks, it's clear that the market haven't hit that typical week where everyone is driven by greed. This kind of peak usually signals that the market is nearing its highest point, and we're not there yet, suggesting there is still room for growth. Some think that the recent sideways movement, where prices are neither shooting up nor plummeting, means the bull run, that is a period of rising prices, is over. However, that's not how market usually operates. Crypto, for instance, is still far from reaching its previous highs, and there are several indicators that hint at a lot of potential for prices to go higher. It's not just broader economic factors like inflation rates or government policy that affects the market. Do the elections have an impact on crypto? Looking ahead, one of the major factors that could influence the market's direction is the upcoming US presidential election. A pro-crypto candidate like Trump winning the presidency could boost market sentiment significantly. Conversely, if Democrats retain power and push forward policies like taxing unrealized gains, it could create a more challenging environment for speculative investments like crypto. This kind of uncertainty makes investors hesitant and could dampen market enthusiasm. The Trump-backed World Liberty Financial is a new crypto project claiming to revolutionize finance by giving power back to the people. However, a closer look reveals that most of the project's tokens will be reserved for insiders, including the founding team, service providers, and other close associates. This is much higher than what's usually seen in other major crypto projects, where insiders typically receive a much smaller share. For example, Ethereum reserved about 16.6% of its initial tokens for its founders and early contributors, while Bitcoin's creator holds about 5% of the total supply. If growth in the crypto market stalls for too long, there's a possibility of a more severe economic downturn down the line, perhaps between 2026 and 2029. This could take the form of a recession or even a depression. But it's crucial to remember that these are just potential outcomes, not certainties. The market could just as easily continue its upward climb, especially if patterns hold and investors maintain their confidence. As things stand, the best approach is to be prepared for a bumpy ride in September, but with an optimistic view towards what comes afterward. Building up a cash reserve during periods of uncertainty is always wise, allowing for opportunities when the market turns. So keep a close eye on the coming weeks. While September might bring some volatility, the overall outlook remains positive for those willing to weather the ups and downs. Patience is key, and so is staying informed. By understanding the patterns and keeping an eye on broader trends, there's a good chance of navigating the market successfully in the months ahead. What are your predictions for the year? Let us know in the comments below, and do not forget to like, share, and subscribe to our channel for more.